Hey, Bulls and Bears, back with another dose of economic reality. The BX4 bull to the bust here, and I just want to say I am out. I am out of these markets. I've been selling off since the beginning of the year. I've really been increasing my getting rid of just my stocks, even some gold miner stocks. I recently sold some of them. Some of them were up, some of them were down. I kind of broke even on those, but I'm just not liking the global news that's coming out here. I'm not liking the risks out there. Now they can push this market up, but when really, really bad events take place, um, even the biggest manipulation, even all the money creation, will not, keep investors in the markets. Right? Just think 2020, the health panic. Look at this headline. Just a couple headlines today. Um, Drone wars, pressure builds, possible nuke warning. This is the way Drudge put it. And there's several articles out there. A lot of people out there talking about nukes, chilling nuclear warning over attacking Iran. And we told you this over a year ago. Um, when all else fails, they take you to war. And this is what it looks like is happening. I think this will be used to cover up the impending economic collapse. And just like 2020, I think people are going to blame everything on the next crisis. And I think it could be nukes flying. And I hope it's not. I hope I'm wrong. But to me, the risks are just too much. I mean, please let me know. Are you still in these markets? I'm still in my 401k. I shifted that over to a fixed income product, or in this case, it's a treasuries. So getting about 5% yield. I'm happy with that. 5%. If I could take 5% guaranteed, I'll take it. I'm not going to pick up pennies in front of a steamroller. After the end of this year and things start getting calmer, if they get calmer, maybe they'll get even crazier. But I just don't like what's happening right now with these global conflicts. I think it's too much crash risk, right? Of course, you can go back years and there's been people calling for crashes. I was one of the opposites, actually. I've been pretty bullish on the markets, but I've always said the markets were completely detached from the Main Street economy, right? You look at consumers living paycheck to paycheck, tapped out, beyond tapped out in many cases, and you look at that compared to the Wall Street economy, and it's completely detached, right? So fundamentals no longer matter. It's all about the money creation, how much money they can pump into the banks, how much debt they can give to people, to give the illusion that there's this growing economy. And so this, I'm out. I just wanted to start the video with that today. I'm out for the most part. I still am holding some stocks. Still, of course, have assets outside of the system, investments outside the system that I am very glad that I have now. I think the banks are at big risk right now. They could keep these banks propped up with endless um, fiat money created at the click of a mouse, or something big could drop and we might see a change in everything. The entire system could change, and we might see several banks fail, including some of the mega banks. They are technically insolvent. It's just that the money creation and the fact that we can create infinite amount of dollars, keeps these banks operational, right? So if you think that's going to happen forever, maybe you should be long in the markets, right? But I just have a little bit of skepticism about the stability of things going forward here. All right. Well, let's get into some other news because there's a lot of things we want to keep an eye on. We've got politicians out there now pushing for lower rates. Now, you've heard the bankers come out and talk about possible rate cuts. Let's just bring this up here out of CNBC. Warren pushes Powell to cut, quote, astronomical rates. So I guess a Fed funds rate at just over 5% is astronomical. When you look back over 20 or 30 years, that's actually pretty reasonable. It's pretty low. But of course, we've got the people right now, they want to keep their jobs. They don't want to get booted out of office, right? So they're going to want to have as much easy money as possible because we know that this whole thing is based on borrowed money, money created, money borrowed, money spent that people don't have. So, of course, anyone that wants to keep this economy looking good, they want to keep the illusion alive, they're going to want to have lower rates. Warren and three other politicians urged the Fed chair to bring down interest rates at the upcoming Fed meeting to and to expand affordable housing. Um, Home prices surged to start the pandemic and have remained high due to both record high rates over the past few years and a short supply. Consumers are starting to get more optimistic about the housing market after the Fed announced December that would cut rates. I don't know anybody personally that's more optimistic about the housing market. I guess if you're selling a home, it's optimistic that you might see rate cuts, and that way the potential buyer can maybe borrow more money to qualify for a more expensive home. But if you're buying a home, it's not much to be optimistic about because if rates come down, that just means they're going to bid the prices of homes up more because the more people can borrow money, the more money they can borrow, the more they're going to bid up the home prices. Um, and that's across the board, right? Easy money equals higher asset prices. Now, you still may see some deflation, but we can see what they're doing. We see they're trying to keep these rates suppressed as low as possible. All right, let's move on here. Let's talk about what Bank of America is doing. Bank of America is sending out warning letters to their employees saying, get back to the office. We saw, of course, a huge surge in work at home ever since 2020. A lot of companies are doing the opposite now. But I think Bank of America may be using this as a soft way to lay people off, right? So you give them an ultimatum. You say, if you're not going to work in the office, we're going to lay you off. They're sending out warning letters. And if these employees don't return to the office, they may even try to deny them unemployment benefits, saying that they failed to comply with company guidelines or something like that. So they'll still probably get unemployment because even if you're fired or let go or laid off, you can still get it. But maybe they're trying to do this to save face so it doesn't look as bad. Without announcing layoffs, they're just making it more difficult for people. Because think about it, with all this movement towards a cleaner environment, why do you want people driving back and forth to work in their gas guzzling cars, or maybe electric cars, which still have to be charged, which still cost money, which still strains the power grid? You want people to work at home, less people commuting, less people on the road, less pollution, less people burning through fuel. Why wouldn't you want people to work at home? So the saying is, or the rationale is with these big companies, is they can keep a better eye on you at the office. I would argue that if you're working on a computer all day or on the phones, you can pretty much monitor what that person's doing. Now, you may not see them when they go on their break and see what they're doing because they're not in the office, of course. But I've been a big advocate for working at home for over 10 years because I've been working at home for over 10 years. So I love it. The benefits greatly outweigh any sort of negative, in my opinion. Even looking at it from a supervisory or a managerial level, I think the benefits, happier employees, employees spend more time with their family when they're working at home, happy work-life balance, as some may call it. I think it's a plus plus win-win. But what do you think about Bank of America, sending out these warning letters? I think there might be other motives behind it. Now, speaking of crash risk and dire predictions, I'm not predicting a crash, but I think the risk is very high. We got Jamie Dimon out there again. He's been pretty vocal. He's been back and forth. He's been saying the economy's heading for a cliff. The economy's resilient. The economy's good. And one of his latest quotes here, quote, speeding towards a cliff, right? So he's back speeding towards a cliff. Of course, the leaders, quote unquote leaders, they say the economy's doing great. Everything's wonderful. And there's one more quote I wanted to give you here out of a recent interview I just heard. Jim Rickards, quote, brace yourself. What is coming is worse than a recession, unquote. So am I worried? No. Am I bracing? Yeah, I've got canned goods. I've got assets out of the system. Um, I'm not telling anyone to take their money out of the bank, but I don't keep a lot of money in the bank. I keep a few months worth of expenses in the bank, but mostly out of the bank just in case, right? So maybe I'm paranoid, maybe not. What do you think? Is this paranoid stuff here, or do we have the real risk of World War III on our doorstep? We see what's happening. We see the leaders right now. We see some warmongers out there, looking to I think shake things up a bit. You know what I mean? So let me know what you think down in the comments. But to me, it's too much crash risk to be investing very heavily at this point. So what's wrong with just sitting back, waiting to see what happens? Maybe at the end of this year, things will die down. Maybe things will get worse. But to me, it just feels better just to kind of stay out of the markets right now. That's me. Still buying precious metals, still accumulating, the surefire assets. They can't go wrong. They can't crash to zero. They can't disappear. That's another thing too. There's people losing their deposits or not getting their deposits. Here's a story out of Shocked. First Citizen Bank customer finds $31,000 deposit gone missing. A teen with same name had been on spending spree. Oh, Lord. So bottom line is, folks, be careful out there because it only takes one hiccup, one bump in the road to throw most people into financial chaos. I mean, look at 2020 when we had the shutdowns. It was just a week or two of missed paychecks, and you had millions of people out there begging for GoFundMe and begging for stimulus checks, stuff like that, right? So be on your toes. A big year. After this year, I feel a little better. We'll talk more about going in heavy on some investments. But if I see a big dip, a big drop, I'll let you know if I'm going to be buying the dip. But hope everybody's good. Keep stacking. We're going to make this a shorter one today. For now, everybody, peace.